Hello and welcome to KYC. I am Sharath Dubey and you are watching NDTV Profit. And let's start the show. I'll be giving you some hints, and this time the hint is a bit different because it's a Kolkata-based company. It's a Kolkata-based company. That's to put it for our Bengali viewers. And the company is into plywood and interior manufacturing. Also, the second hint I would like to give you, we are coming closer now. They deal with MDF and laminates as well. MDF is nothing but your medium density floorboards which are there, which you see in your home. It's very close. Another hint I would like to give you about this company is Pratik Gandhi is the brand ambassador. This is one of the easiest companies you can guess on this, but I'll give you something much more than that. And of course, this is the company I'm talking about, and the stock itself has given 190% returns in the last 5 years as well. So if you're holding this stock, congratulations. But some concerns on short term are definitely there. But let's talk about the company. What's the company all about in KYC you'll be getting? And yes, if you like cricket, you can at least score a century also. That's something to look out for. And the company is Century Plyboards. That's what I'm talking about. But why are we calling this company right now? What are the key reasons for it? Is there a change happening in the industry? Come, I'll explain you why we are getting this company in KYC. The first reason why we are getting the company in KYC is, of course, the Q3 numbers. That has been on a good length. Volume growth has come in, margins has come in. And the second point why we are getting this company is that the important market share gains that has been reported by the company. The company is already a market leader in their segment, so it becomes very much important. And the UP plant expansion, that announcement is also something which the street is looking at. Also, another reason why this company is relevant for KYC is they are focusing on Tier 3 and Tier 4 markets, and what the growth plans is. That's very much important for a stock like Century Plyboards, and the capacity expansion plans for the next 2 to 3 years. The company is undergoing some change, and those changes, when the benefit starts coming, that's what the street is waiting for. And the margins growth, the value added segment, how much growth we can expect in these segments. So these are the key queries, we will be asking the management, and joining us will be Keshav Bhajanka. He's the executive director at Century Plyboards. But let's talk about the company. What are the key details about it? What are the key Q3 numbers? Capacity expansion, so much happening. It's just a simple plyboard, but it is difficult to get all these things in a one single commentary. About the company, it's one of the largest plywood manufacturers, almost 29 to 30% plus market share in key products. They're dealing with MDF, laminates and plywood. To be honest, the entire interior setup, the infrastructure as we call it, strong performance has been seen in the plywood segment as well, and that's what the numbers are talking about, and we will get into those details as well. Gross margins, the Q3 numbers, that stood out for me. It's up almost 50%, it's there, so that's something to look upon. And also for manufacturing of the plywood and the medium density fiber boards, that is where the new Uttar Pradesh unit comes in. We'll get in some more details about it, as well as how big the investment is going to be and how will the funding happen. And just remember, this amount is 800 odd crore rupees, but the funding, if you look at it, that's going to happen via debt or equity. So that's something which the street has understood. Also, the FY26 guidance is very much important. Plywood over here, sales growth you can expect in the higher teens. For laminates, particle board, interesting, it's around 40% kind of sales growth we are expecting in FY26. And we'll ask the management how confident they are. Remember, just 1 quarter is left, and for the EBITDA also, these are the numbers we are looking at. Also, the long-term guidance, that's very much important for the company. The overall revenue guidance, it's around 17% CAGR we're expecting for the next 5 years, from FY26 to FY31. And the revenue target is a big one, that's around 12,000 crore by FY31. So this is the entire picture. We are getting the entire about the company, what are the key details about it and what the company actually does. But let's also talk about the rating parameters. Rating parameters is very much important when we are judging a company in KYC, and these are the basic things. And in the operational parameters, this time I have changed a little bit. I've added something in the cash flow segment as well as the volume kind of momentum in their key products. Of course, the income statement, balance sheet remains the usual. Return ratios, it's very much important to track the company, and that's what we'll be getting you. Apart from that, we'll also have shareholding pattern where we see where the institutional money is moving in the stock, and street cred, how much returns have come in for the investors, in different period seasons. Also the valuations and analyst take, that's also pretty much important, and valuations we will be definitely comparing them with its peers and the analyst take, what the analyst community is talking about. But let's talk about the first rating parameter, and that is the income statement. And remember, I have added the Q3 numbers also as well. We have already stated that the Q3 numbers were on the stronger side, and let's just see how the money has moved. Of course, there was a good up move in FY25, and you could see, if you could just 12-month normalization, if you do, this number actually goes past that. But the growth hasn't been very big linear growth. The growth has seen its ups and downs, and the entire industry, to give the perspective, there was some kind of a pricing pressure, and then a little bit of consolidation came in, and of course the larger players do well when consolidation happens, and now we are seeing that pressure or the problem bottoming out, and that augurs well for entire ecosystem of the larger players which we track in the listed space. PAT also has been flat. In FY25 was 186 crores, right now it's at 189 crores. Of course, it's expected to shoot up past the 200 crore mark Q4. This is just a basic mathematics calculation. But net, the margin front, that needs to come back to that 15% on a consolidated basis. And that's what the street is looking out for. And because of that, I've given this a neutral rating when it comes to the income statement. So we spoke about income statement. Let's talk about balance sheet. Balance sheet I have really liked about this company. The net worth has been decent, but one thing I'm talking about is the total debt that has slightly increased. But remember, the debt to equity ratio is nothing to be concerned about. It's around 0.3 to 0.4 between that. And it's a pretty healthy one. The way the company is expanding and the way they are managing it, that's a good one. And cash balances are also decent, around 70 odd crore rupees. But remember, a high working capital business is also there in plywood segment. But net, I really like the quality of the balance sheet in the analysis, despite what the capex expansion plans are undergoing and the way it's being managed. That's why a strong thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet, but apart from that, operational parameters is very much important, and I have added a little bit of cash flows elements, the cash conversion element. That was a proper data which was there to actually get them, and that has actually slightly improved, not greatly but slightly, but it's on the positive. But more importantly, let's look at the sectoral performances, how they have gone up, and these are all the year-on-year growth which I'm talking about. They have maintained it for plywood volumes. For laminates, it has actually, the losses have narrowed down. MDF, there was a big up move, that was on 59%, and of course it's not important, or you could say it's very difficult to get these rates every time because there were some anomalies on lower base last year, but in FY23, I'm sorry, but 18% it's back. So you could say a decent number of parameters have done well in the 9-month FY26 numbers. So overall, the operational parameters and the cash conversion cycle, that has improved, and that's why I'll give this a strong thumbs up as well. Now let's talk about the return ratios, how the returns have panned out. Remember, for the last 2 to 3 years, the industry has been under the pressure, and ROE, generally you require at least a 15% ROE. For a company like this, it was 18%, then it fell to 10%, and now also it hasn't picked up a lot, but it's maybe bottoming out, and we'll ask the management also, Keshav also, that can we be back to that 15% mark, or it'll take some time. And to be honest, I'll just give you a perspective. The story remains the same here also. The entire thing is that company is going through some capex expansion plans, and whenever that happens, there is always a stress in the balance sheet, a little bit of return ratios get muted, and if you're a long-term investor, maybe in 2 to 3 years this cycle turns also, and when that cycle turns, we see a lot of interest from institutions and retail. But overall return ratios as of now, what data suggests, I'll give a strong thumbs down when it comes to the return ratio. We have spoken about a lot about numbers, but the numbers continue, but the shareholding pattern is also very much important to track. Who is buying, who is selling, where are the institutions? Promoters, it's stable, 73%, there's nothing much to talk about. FIs, they have slightly reduced their positions from 6% to almost 4%, and this is the December 25 shareholding pattern I'm talking about. But interestingly, the DIs, they have actually increased it from 15% to 18%, and they have remained stable. So one side DIs are buying, other side FIs are selling. It's normal, it's stable, and that's why I've given this a neutral rating. After shareholding pattern comes the street cred. How much stock has given the returns? 6 months, nothing much has happened. It's just flattish, just 4% returns coming for the investors. Let's see the other timelines, how things have panned out. Year to date, nothing much has happened. And remember, the Q3 numbers are also out. Apart from that, let's see how the company has performed in the last 1 year. It's actually down 9%. So either way, the needle is not moving if you're a short-term investor for the stock. But if you're a long-term investor, congratulations, stock has given you 190% return. And that's pretty much important. So there is a divergence when it comes to the street cred. And that is the reason why I have given this a neutral rating. So shareholding was important, street cred was important, we talked about it. But what do the valuations stand for? There are hardly a handful of companies. It's a very unorganized market as well, the plywood market, I must say. But the organized players, the listed players, we can easily get the valuations to check which is cheap, which is expensive, and we have taken a 12-month forward P. And remember that Century Ply is having a strong premium when compared to Green Ply and Green Panel. So of course the valuations are on the other hand, but remember, they are getting market share gains, they are having a better margin profile, and throughout the history, Century Ply has had a strong premium to valuations while comparing with Green Plan or Green Ply, either of these two. So they of course command a premium and they deserve it as per the analysis, but is it very cheap right now? No. Of course, we need to wait it out because the stock has been largely flat over the last 1 year, and if the earnings starts coming in and the entire capacity expansion plans benefit starts coming in, and that's where we might see a re-rating coming in the stock at these valuation levels as well. So it's a neutral rating when it comes to the valuations. But let me give you a perspective of the outlook. I mean to say the analyst take outlook, of course, we discussed in about the company. And totally, we are having roughly, you could say, 23 analysts tracking the stock. Sell, only 2 of them are there. Combine both the buy and hold, it's around 21. Roughly, you could say 85% plus analysts are still bullish on the stock. And from the current level itself, they're expecting 13% returns for the next 12 months as well. So analyst community is also very bullish on this counter, and let's just give you the entire revision of the KYC ratings, how things are actually panning out. Income statement has been largely neutral, but the balance sheet and the operational parameter is something which I liked. Return ratios need to come up. They need to come up that 15% mark. That's what the street is expecting. Shareholding, street cred and valuations, it has been largely neutral, but the analyst take is still there that they are quite bullish on this counter. So the final rating is 5 out of 8 for Century Ply, which I have given for this company. It's slightly on the higher side of the average generally of the ratings for KYC. But joining us to give us more perspective and to understand the company is Keshav Bhajanka. He's the Executive Director at Century Plyboards. Good afternoon, Keshav. It's always a pleasure to talk to you. And this time the Q3 numbers were on the stronger side. I presume there were some market share gains also. So how did the quarter go about, and what are the key views for the industry?
Good morning. Thank you so much for having me on the show. I think you're absolutely right that Q3 was a strong quarter with a muted overall demand environment. This has definitely been due to market share gains on our part. Overall, we have grown revenue by 18% plus, which has been substantial. All our segments have grown. Our plywood segment has grown by 15%, laminate by close to 10%, MDF by 19% plus, and particle board, because of the new capacity and the lower base, has grown by 80% plus. Overall, I believe that this growth trajectory is likely to continue, and we are very well online to meet our guidance, if not better the same.
That's pretty interesting on that. But Keshav, the margin front, I just wanted to get your views on that. Some kind of, operational efficiency is also kicking in. I saw the numbers, but a healthy, guidance for the margins going ahead, maybe for the next 2-3 quarters. What would that be?
I think we have given guidance for the year overall, and we are pretty much online with the same. As far as plywood is concerned, we are given 12 to 14% for the current FY, and I think we'll easily meet that. In laminates, we are given high single digits, and we are well online for that. In MDF, we are given 14 to 15%, and in particle board, steady state margins will be 15%. But as this is a large capex and new capacity that has just come into play, for the current year, we have given low single digit EBITDA numbers. We are on track to meet all of these, and going forward, like you rightly pointed out, as operating leverage increases, as we gain market share, quarter on quarter, year on year, margin profile should look further on the up.
And Keshav, there's the new capacity expansion plan happening in the state of Uttar Pradesh. This will be used for what, and the total investment would be how much? And will it be only through internal accruals, or there'll be a mix of equity or debt?
I think the Uttar Pradesh plant is predominantly for plywood and for MDF. As you know, Uttar Pradesh is one of the largest consumption hubs in India. And alongside that, Uttar Pradesh has a massive benefit in terms of raw material and perennial raw material availability because it is one of the hubs of agroforestry as far as India is concerned. The investment in MDF would be close to 800 crores, and the investment in plywood would be close to 300 crores. And a majority of this will be funded through internal accruals. As you know, we have a very strong operating cash flow, and I think we will be able to fund this without any meaningful debt on the books.
Pretty interesting, and we did mention to our viewers in KYC that the cash conversion cycles, they have come down as well, and that augurs well if you look at the ratios as well. But Keshav, the idea is the market share gains. Broking community has been upbeat about that. Any kind of quantification on these, in your key segments which you are operating? What kind of market share gains was there in the organized space for you?
Unfortunately, our industry being heavily unorganized, as you had rightly pointed out, is very difficult to get authenticated numbers. However, if you look at the market growth overall, for instance, in plywood, the market would be growing at a single digit, maybe a mid to low single digit, whereas we are growing at 15% plus. So that shows the sort of market share gains that are taking place. But unfortunately, I can't put any authenticated numbers towards that.
All right. And Keshav, the tier 3 and the tier 4 segments, they have also started, using the interior infrastructure as a whole for their home improvement. And that's what we have been hearing it from our audience and KYC also. What are the growth plans for it, and how will you actually, get this area? Because it's pretty much different than how you work in a tier 1 or a tier 2 city.
I think the first step is to increase our distribution footprint, which we have been able to do with reasonable success for the past so many years. I think we would have the strongest distribution footprint out of any wood panel company based in India by distance. And this is ably supported by a strong supply chain network of 40 plus distribution centers located pan India and 8 factories located pan India. Alongside that, you see, we're the only company that has the entire basket of products, whether it is from premium plywood such as Century Club Prime to economy plywood such as Scenic to Century MDF to Century Particle Board. We actually have products that cater to every single price point and every single price category. This enables us to penetrate into tier 3 and tier 4 markets because those might not be necessarily premium plywood markets, but they will definitely be particle board and MDF markets. So as the only company in the country today that has a range that encompasses all price points, I think we're well poised to capture that growth as well.
And what are the current capacity utilization levels for your plant right now?
By Q4, I think we'll be at 90% plus for both plywood and for MDF. So going forward, this is the reason that we have started, the process of setting up a new capacity. And within the next 2 to 2.5 years, I believe the new capacity in Uttar Pradesh is going to aid us to higher overall capacity.
That's pretty much interesting. Just to give the perspective to our viewers, whenever a company gets that 75 to 85% of capacity utilization, that's where the company starts planning in to start and new operations as well. And that's what Keshav pointed out as well. And this capex investments which we are getting for the next 2 to 3 years for Century Ply, what's the amount, has been earmarked, just to give it a clarity for our audience?
So as of now, the only large frozen capex plans that we have, like I had mentioned earlier, one is our new plant in Hoshiarpur that we are coming up with, which is a plywood unit with a capex of, I think, 120 to 140 crores, and the unit in Uttar Pradesh, which will of course be in phases, but with a total capex of 1100 crores. This is the only frozen capex we have on our books at the moment.
Keshav, this is an industry-specific question I have for you, and this industry was going under the stress for the last, say, 2 to 3 years. A lot of your peers also spoke about it, that the green shoots are coming, and you folks are in the organized space, so the consolidation benefits are coming to your company as well. What is the change in the industry? Maybe say last 6 months, what was the pressure, the pricing pressure from the China which was coming, and now what's happening for the Indian players like you?
So I think in plywood, it is not so much about pricing pressure from imports because the quality of the products that we make is not comparable to imports. However, you see what had happened is after COVID, all the new inventory, all the unsold inventory that was there in the market got sold. And our product starts to come into use when it goes from a house to home. When customers such as yourself look to make your dream house, that is when the demand for plywood, particle board, MDF, laminates, that is when it begins. So I think the new inventory that was supposed to hit the market has not hit the market in a time frame that we were expecting. We were expecting that customers would move in a lot sooner, but things have taken a little bit of time. But now, with new inventory hitting the market, I think the demand going forward should look much more robust.
Keshav, this new inventory which is hitting the market, will it be in the fourth quarter or maybe in FY27 first quarter we'll get to see the benefits?
The problem is that for the past so many quarters, I've been saying it hits the next quarter. So I'd like to play it a little safe here, but
Okay.
sooner rather than later.
All right. And what about the internal expansion? Because external expansion we spoke about, but internal expansion also is there. That's what I'm reading about. One is in Kandla, Guwahati, and Joka, which is in Calcutta. So,
Definitely.
what's your view on that?
As we move towards higher capacity utilization, we will definitely explore brownfield expansions in all our plants. When we set up a greenfield unit, it is far more expensive. A brownfield expansion becomes much cheaper due to so many common ancillaries. And we have scope for expansion, like you rightly pointed out, whether it is in Kandla, whether it is in Chennai, whether it is in Abadwale unit. So for MDF, we are going in for an expansion in Q1 of next year, where we'll be augmenting our capacity by close to 70,000 cubic meters per annum through extension of our line. And we are also exploring actively increasing capacity all across segments. So brownfield expansions will definitely take place, but these are not high capex expansions, so to speak.
And Keshav, we had spoken last time about the tier 1 areas where new products are being launched by your company. What are the consumer trends looking like, in tier 1 places in this interior infra space? And is there any offering coming in from your company on that?
There are a few. I might not be able to touch upon them in a lot of detail till they're launched. But I think the one shift is people want branded products. People want value for money. So they've realized that, wo sasta roye, bar bar mehenga roye ek bar, that sort of a saying has now gone and percolated into people's minds. So I think going forward, all of these trends start from premium markets, from tier 1 markets. So I think this is a very positive sign for us in the medium and long term.
Okay, and Keshav, talking about the volume growth guidance, most of the FY26 numbers we know, but for FY27, will they sustain as FY26, or how you're looking at this space now?
So as we haven't put any official guidance for FY27, it's difficult for me to give you concrete numbers. But what I can say is that, we are hopeful that the growth momentum should sustain, if not accelerate.
All right, so sustain is a very important word coming in from Keshav. But apart from this, there was a seasonality in this third quarter, which generally is. So that Q4, just to give a view to our audience, has that seasonality, the Q4 seasonality doesn't play out, or is there some kind of an overhang of Q3 slipping into Q4?
No, I don't think there is any overhang. Q3, because it had a lot of these, festivals and a lot of holidays in it. So that's why Q3 is normally a little subdued. Q4 will definitely be better.
All right. And one more question, Keshav, is the price hikes. Some folks in the industry, when the going gets good, even the demand is also nice, then a price hike happens. Any kind of price hikes we are looking at, the year has also started?
I think our price hikes are predominantly driven by raw material because in margin profiles, we have a long-term EBITDA guidance and we aim to achieve the same. This quarter, we have taken price hikes in our plywood category already, and that is due to certain raw material cost pressures. But in other segments, I don't see any major price hikes that are on the cards at this point in time.
All right. Thanks a lot, Keshav, for giving us the entire view about the company
Thank you so
and the
much.
industry. Best of luck for the future. And for our viewers, I just like to revise the ratings, which is very much important for this company, what we have given in. And of course, the income statement was largely neutral, but the balance sheet is strong despite macro headwinds coming in. Operational parameters were good, but the return ratios, they are below the 15% mark. There are some green shoots, but we need to wait it out. Shareholding street kid, nothing much there, but if you are holding the stock, say for the last 1 month or 18 months, That is where you're seeing no major stock reaction happening. Valuations are neutral, but of course, companies commanding a premium over its peer, and analysts are still bullish on it. Largely, almost 85% of the calls are either having buy or a hold rating. So total KYC rating is 5 out of 8 for Century Plyboards, and we spoke with the management also. That's all, folks, for today. Stay tuned to NDTV Profit.